This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's finally Friday. We are coming to you once again from the CNBC-TV18 Motilal Oswal studios. I am Prashant. With me, my colleagues Sonia and Nigel. Guys, hi, morning.
Hi, good morning, Prashant. Good morning, Nigel.
Morning.
Well, market dithering at all-time highs. I guess there's still some more patience that we need as a virtue, right? Which is hard. But I'm sure for the bulls, at some point in time, the all-time highs would come through, whether it's today, next week. You never know.
Well, there's a pause all around, right? Yesterday, because the markets paused, the RBI governor paused as well, and India didn't make any progress in the test match against Australia. So hoping that Friday is far better than Thursday, because yesterday we had expiry that played out for the bears well. You had the RBI governor that hinted some kind of hawkishness, which the street didn't like. And India was dismal by the end of it in the cricket match. So I'm hoping 5 wickets down. Hopefully the tail can wag this time
And next
around.
week you have the US FOMC policy, and there as well there could be a pause, right?
Yeah, hopefully. That's what data points are suggesting.
The big event for me is today evening, 6 p.m.
When you go home.
No. The French Open.
French Open.
It's the semi-final,
Yeah.
but it's almost like the final. Alcaraz and Djokovic go head-to-head.
Yeah.
So, I mean, that's going to be...
Who are you
quite
gunning
something.
Djokovic.
Sure, Alcaraz, I think, The guy, at 20 years old, he's kind of, hitting it out of the park. So, but, Djokovic always seems to find that one more lever whenever he goes up. He ups his game. I mean, I don't know, magically. So it's going to be a tough one, but you never know. 6 p.m., guys.
Okay.
All right, well, let's just quickly take a look at what the market is looking like, right? I mean, so yesterday there was a bit of disappointment. It's a pause, and I think that's the right way to put it. We came off, but we are still holding on with important support levels. Those have not been broken, and I think that's important to emphasize, even as you look at what happened yesterday. We're still above important supports. Now, we don't have very much by way of, big support from the US markets overnight, although markets were higher. But it was once again led by the NASDAQ. I mean, markets ended higher, but largely tech is what contributed to it. So 1% on the NASDAQ, and the tech names there lifted the S&P higher as well by about 0.6% or so. And the NASDAQ went up because yields fell. They were down about 8%. Remember, the previous day NASDAQ was down 2% because yields went up 14 basis points. Yesterday, yields fell 8 basis points. The CBOE WIX now is below 14. It's the lowest since pre-COVID times. It's quite something. I mean, absolutely no fear out there, indicating that, things are going to be pretty solid. And they have been pretty good if you just look at the indices. Now, the dollar index has also come off a little bit. We were talking about 104 point something. We're now at 103.3. So, and by the way, the dollar index held near intraday lows yesterday. So there may be more to go here on the USD. We had one data point. So the US weekly initial jobless claim saw a surprise jump. The number rose by about 250,000. That level is consistent with indications that the labor market perhaps is starting to show first signs of crack. Remember, the headline jobs, the monthly jobs data has been pretty strong, but this showed some surprising rise, which is what is needed. The hikes have all been directed at making the labor market wobble a little bit so that the wage growth is not as fast, etc. But in any case, we have the FOMC meeting only towards the end of last week, and before that we get CPI numbers, which I think holds greater sway in terms of what the Fed may or may not do. Okay, let's come to the market here, right? Now, on the Nifty, as I said, we wobbled a little bit, but we did not kind of sell off completely. Supports are holding. The first level is 18,464. This must hold for the higher top, higher bottom pattern to remain intact. So keep that in mind, 18,464. We left off at 18,634. So it's, goodish, almost 200 points away. By the way, the 20-day moving average also has moved up a little bit. That stands at 18,431. So, this zone of 18,431 to 18,464, I think this is the, important support area. If the market stays above these levels, as I said, the higher top, higher bottom formation is intact. And there's, there may be pause, some sideways action, but eventually you're heading higher. For the Bank Nifty, the 20-day moving average comes in at 43,977. The swing low of 43,706 then after that are important downside levels, which the Nifty must not close below, must not close under. So we'll see how this one really pans out. We left off almost exactly at the 20-day moving average, by the way. To move higher, this is a level which we've put out over and over again. We must close on the Bank Nifty above 44,500 levels. And that will give you a clearer picture of the market wanting to move higher with some amount of momentum. Last day of the week, there's not very much by way of data points, etc. RBI policies behind us. Will we have another quiet session? Or, will they be, if you get a large dip at some point, will the dip be bought? I would tend towards the latter rather than the former, but we'll see. The SGX is indicating about a 30-odd point higher start, 18,750. Sonia.
I think it's just a matter of time, right, before which the all-time highs get taken out. We are almost there, but not there just yet. The global cues are also positive, so in that context, today could be a good day, a good start actually. But the Nifty failed to hold on to the intraday high yesterday. We've come off quite a bit, and we are at that 18,600 mark, not too far away from the all-time highs of 18,800. Couple of things that I want to mention in addition to what Prashant just spoke about. The Dow and the S&P 500 both had a good session yesterday. In fact, the S&P 500 has now seen its strongest close or highest close for 2023. So it's had a couple of good weeks. It's the fourth straight positive week for the S&P 500, and this is the first time since last August. So it's had a clean streak on the upside, and the Dow is headed for its second consecutive week of gains. So global markets have been solid. That picture has been good, and our own markets have used that as a crutch to sort of move higher. The flows have thinned out a bit actually. DI sold yesterday to the tune of 400 crores, while FI has bought a bit, about 200 odd crores. A couple of stocks that I'm looking at this morning in the banking space, one of them is SBI. There's a board meeting where the board will be considering fundraising via an issuance of debt instruments. So keep an eye out on that. There's also Kotak Mahindra Bank, the Canadian pension fund. CPP is likely to sell about 1.66% stake in the company. That's source-based information. So these are a couple of banks that could be in focus. But otherwise, the market has been dithering at higher levels. Even this morning, the SGX Nifty is indicating a positive start, but largely muted. So let's see how it goes from there.
Well, Sonia, we're getting some disappointing data coming in from the United States, which is good. But the initial jobless claims went up. Earlier in the week, we had the services data that was a little bit disappointing. And the global PMI as well was a little bit disappointing. Coupled with that, you had the factory orders that weren't that good. Now, that's good news from an equity market perspective, right? Because those rate hikes, they seem to be having some kind of impact on the economic data coming out of the United States, though the CPI data will be keenly watched in the next week. What about the cues? Well, the Indian markets, the uptrend is intact. Yesterday, you had a mild pullback from the top, and that's really par for the course. The good news today is Brent crude prices are mildly lower, and the dollar index has cooled off a little bit as well. And we track both those two indicators, so that's pretty good news. But the bigger point that I made yesterday as well is there are mid-cap and small-cap stocks that have done very, very well. Now, if they happen to be part of your portfolio, I think it'll be prudent to at least do some cleansing of your portfolio, because in the last 2.5 months, there have been a lot of stocks that have moved up, and some of them are not fundamentally backed. So just keep an eye out on that. Yesterday, after a while, you had the mid-cap and the small-cap indices that underperform. Stick to the names that you want to and cleanse out some of those. So have a relook at your portfolio. The problem yesterday was institutions that have been backing up this market, that's the DI and the FI number together, they turned net sellers. And the FIs, they added some shorts, close to 10,000 short contracts were added, and they mildly moved back into the short position. So 52% of their positions are on the short side. The shorts in the system are not such a bad thing. You like to see some shorts build up, because if the institutional flows don't pick up, then these shorts will be forced to cover out. So I like a net short market rather than having a net long market. The PCR yesterday we pointed out, it's moved to the upper end of the band. I think this is an important cue. Every time it goes to around 1.4, we see the Nifty pull back a little bit. When it moves to around 0.7 odd, we've seen a bit of a, we see the Nifty see a bit of a bounce. So just keep an eye out on that. Now we're bang in the middle. Options data, that seems a bit of a strategy that's playing out. 18,700, that's a crucial mark. Which way do we swing? Well, time will tell. But for the time being, it appears that there's a strategy in place. That's you write the 18,700 call as well as put. A short straddle is what it's known as. You pocket close to around 180 rupees and you deduct 180 rupees from that 18,700 odd mark. So on the downside, 18,520 becomes important. And on the upside, 18,880. So that's the broad range that you're looking at. So, you want to buy closer to around the lower end of the range. For starters, the SGX is starting in the green. I don't think you should go ahead and rush and buy this mild green. Maybe wait for a bit of a pullback. The uptrend is intact. So watch that 18,520 and look to buy, but only look to buy on the dip.
Okay, look to buy on a dip. All right. Well, another thing that, of course, we need to watch out for is the way the shift is happening in terms of individual stocks, right? This week, all of this week, the focus has been in the broader markets, and so many pockets, right? Whether it's defense, whether it's auto ancillaries, whether it's power stocks have come back in a big way. So that could be the focus area. I know we keep getting fixated about all-time highs, but there's so much money being made in the broader markets.
Well, that's right, Sonia. And talking about power stocks as well, I met a corporate that indirectly is linked to the power sector. And they said that it's not just in India, even globally we're seeing that push towards renewable energy. And there are various components, whether it's cables, whether it's conductors, that could find some demand. So let's see how this goes. But yes, the headline index, we're fixated whether it hits all-time highs. Plenty of money to be made in the broader markets.
And people are making it, right? All right, before we go any further, let's quickly tell you what's lined up in the first half hour of the show. Markets across the globe. Rana Gupta of Manu Life Investment Management will be joining in to discuss that. Our research team will get you CNBC-TV18's list of top 10 stocks for the day. And 8:30 this morning, we have Ajay Bodke joining in with the fundamental check on things.
All right, on the equities front, first up, we have Lawrence Belanco of CLSA, who says that the Nifty looks set for further price action below 18,360 to 18,980 resistance. But draw your attention to the mid-cap space, as we just pointed out, right? The Nifty mid-cap sector has recently experienced a breakout from its 2021 to 2023 consolidation pattern with momentum confirmation. This suggests an initial upside target of 38,400 and then 42,388. This supports further outperformance by the mid-cap space and dictates an overweight stance.
Okay, we also have a view coming in from Mahesh Nandurkar of Jefferies, who says that financials and IT sector together account for 50% of Nifty and are key for any India portfolio. Past 14 years data shows that both move in the opposite direction. 70% of the time, they believe that there is still a lot of room in the overweight call on banks and underweight call on IT, given the fundamental trends and relative valuations. According to Jefferies, this type of trend usually lasts for 3 quarters, and we are just halfway into it currently. Mahesh adds that they would be sellers into the recent IT rally going forward. By the way, we've got a couple of IT companies joining us today on the program over the next 2 hours.
Oh, absolutely. And, after the discussions that we had last week about a lot of IT companies talking about scaling down or, clients deferring their decisions, there is a lot of concern once again that has popped up in the IT space. So let's see, we'll get more conversations going today. Let's get you some money market views as well. On the rupee, you have Lakshmanan V of Federal Bank, who says that the RBI maintains status quo. The focus now shifts to an action pack next week, where the Fed, ECB and the Bank of Japan are slated to meet for their respective monetary policies. There are high expectations for the Fed to refrain from tightening policy for the first time since January, while the ECB is expected to hike by 25 basis points despite the Eurozone economy slipping into technical recession. The rupee volatility remained quite subdued throughout this week, and the currency is expected to trade in the 82.28 to 82.84 range till the FOMC.
Okay, on bonds, we have Lakshmanan V of Federal Bank, who says that the RBI delivered no surprises in yesterday's MPC. Market will await the FOMC next week to draw fresh directions from the US rates market. He expects the Indian benchmark 10-year yield to continue to trade in a tight range of between 6.95 to 7.05% till the Fed meet at least.
Well, we have a lot of stock-specific action to track for you, and we'll get to that in just a bit. But for the time being, let's run you through the list. We're looking at Tata Palm, HAL, Aether Industries, Biocon, NHPC, Capacite Infra, IRB Infra, IRB Invit, and Snowman Logistics. Their stocks on the back of positive news flow. Well, because of that large block that we're looking forward to on Kotak Mahindra Bank, that could be the stock that will be reacting to that.
Okay, Rana Gupta is now joining us, and he's Senior Portfolio Manager, India Equity Specialist at Manu Life Investment Management. Rana, good morning. Great to have you with us here on the program. We just read out, and we'll have the Lawrence Belanco CLSA call, but that's more from a technical perspective. He's calling for a significant upside in the mid-cap index, the mid-cap part of the market here in India. The Nifty, he thinks, will remain ranged. So large caps range, mid-caps, lots more upside. So I just want you to respond to that. We've had a bit of a feverish kind of rally in the mid-cap and small-cap space day after day now for a few weeks. What's your sense? More to go here?
Look, good morning. Look, fundamentally, if you look at the Nifty, the market index, Nifty has IT and some of the external facing sectors. And there are global uncertainties. There are new technologies coming, which can impact this company's revenue and profits. And also, these companies, I'm sure they will adapt in due course of time. But in this next 3-6 months can be somewhat challenging. And that's why I think on the top indexes like a Nifty, I think their weights will impact. However, if you look at the mid cap or the broader indexes, they have much bigger representation of the domestic sectors like auto ancillary, banks, non-banks, and the consumer sector. And we are also bullish on a high representation of those sectors in the mid cap and the other broader indexes should mean that these indexes should do better than the broader or rather the Nifty 50 kind of indexes.
Okay, so I wanted your thoughts on what's happening with the IT sector. Do you think at some point in time the IT sector will make a big comeback? I'm asking because the commentary that we're getting from managements is still on the weaker side, where there's some concerns about client spending, deferral of orders, etc. What do you do at a time like this? Do you buy or do you avoid?
At the moment, I think it's a bit of a wait and watch because yes, there are delays. There are clients are looking at their IT spend, discretionary spend delayed, but that's more of a cyclical thing. But we also have to understand and assess the impact of something like a generative AI. Our initial research suggests that this could have a bit of a deflationary impact. Now, nothing that the Indian IT companies cannot manage in the medium term. I'm sure in the medium term they will restructure and respond to it a way that that they can manage it. But in the very next few quarters, I think because of generative AI, the challenges we remain in a position to kind of ascertain them, and also the IT companies, in our view, they need to also respond to those challenges.
Hi, good morning, Mr. Gupta. Nigel on this side. I wanted your view with regard to what are you expecting from the Fed. It seems the global markets as well, they're quite complacent that there's not going to be any kind of rate hike that's coming about. If we're looking at the Fed tool as well, that's indicating a 70% chance of a pause. A lot of economic data that's coming out of the United States is a little bit disappointing, which is good news from an equity market perspective. How do you see the Fed go about this? Pause and then cut rate later this year? Or do you think they have still one more rate hike in store?
So I think the way many people are describing it, and we are on board with that view, it's a skip. Now, skip essentially means it's a hawkish pause, which means a pause. We don't know about the next move. It could be up, could be down, depends on the data, and which we would think that that's appropriate way to look at, because although there's some sign of economic cooling, but may not be enough or may not be to the extent that Fed would have liked. So I think a skip or a hawkish pause, if you were to term it that way, is what we expect. But let me take this opportunity to point out, Fed, what they do, what they say is very, very important. And in fact, more than the skip or pause, I think more important is going to be their longer term dot plot, which I think will come out after this meeting. But I also would like to take this opportunity to highlight one thing. If you look at the emerging markets, particularly outside China, whether it's India, Indonesia, Brazil, Mexico, they are all showing pretty strong growth and declining inflation. So that puts them, I think, in a pretty good space. In fact, China was the first quarter was strong, but since then they have lost a bit of momentum. So I think the strength and the resilience of the emerging market is something that globally we should take note of.
I like that skip, right? Hop, skip, jump. It's hike, skip, pause. That's some wordplay early morning.
Yeah.
Rana, but it's incredible, right? Rates in the US moved from 0% to 5%, and we are not very far away from new sort of highs on the US indices, right? So should we continue to wait for trouble? Because when I say trouble, I mean recession and a dip, etc. Or you think, how should one approach it? Because it's been a year and a half, right? But it's yet to show up.
So I think, again, the devil always is in the details. So if you look at even the S&P breakdown of the sectors, it is the US tech stocks which is powering the index, right? I think S&P is up more than about in double digits this year. And 90% of this gain has come from the US tech stocks, where investors are building in pretty bullish estimates based on generative AI and what it can do to those stocks. And in fact, it's not even US tech stocks, it's limited to, I think, 5 or 6 stocks, which is driving this rally. But outside that, I think the other stocks are probably, if you exclude the sector and some of the stocks, S&P is flat to 1-2% up for the year. And I think that is all right because rates have risen, of course. And in US, there's a bit of a time lag before the rates impact because during the COVID, the corporates termed out their maturity. As you would be aware, in US, the mortgage rates are fixed for longer tenure, as in some cases like 30 years. So it takes time for the rate to transmit to the system. And I think that's what Fed governors also want to say, that they are skipping this because they want to give time to see the interest rates transmitting through the economy. And I think that's what has happened. Also, let me just point out one more thing here, that you have to look at the Fed policy rate. You also have to look at the health of the commercial banking sector in US. Yes, there have been concerns on the regional banks, but the US commercial banks, the bigger banks, continue to be in a very, very good position, right? So I think their advance of credit and how that is going is also very, very important because that's what determines the health of the domestic economy. So whether the credit mechanism is continuing robustly or not, I think a lot will depend on how the US stock market goes, particularly outside the tech sector.
Mm-hmm. All right, we will leave it at that, Rana. Thanks a lot for joining in. Appreciate your thoughts. And, what stayed with me really is your comment on the tech sector, where you said that the tech sector is a wait and watch because generative AI could have a disruptionary impact on the technology space. And that's a theme that we're going to take forward in our next couple of discussions as well. We take a quick break. On the other side of the break, our list of top 10 stocks is lined up with our entire research team. Stay with us.
डायबिटीज कंट्रोल करने के लिए आपने इतने स्टेप्स उठाए।
नो थैंक्स।
तो हमने भी आपके लिए एक कदम बढ़ाया। बजाज अलियांज लाइफ इंश्योरेंस प्रेजेंट्स डायबिटिक टर्म प्लान, इंडियाज ओनली टर्म प्लान एक्सक्लूसिवली डिजाइन फॉर डायबिटिक्स। ये प्लान आपको हेल्दी लाइफस्टाइल अपनाने पर रिन्यूअल प्रीमियम्स पे रिडक्शन देता है। समझो हो गया।
The MG Gloucester Blackstone. Drive unstoppable.
Helps beat sensitivity fast. Sensodyne Rapid Relief.
Keeping up with the pace of life is not easy. To find the perfect balance, we need to savor the pause. See? It never ends.
नई कार तुमने कार इंश्योरेंस खरीदा होगा एगो ऐप से, नहीं?
आपको
नहीं तो कोई बात नहीं मूर्ति, गलतियां होती रहती हैं, कोई जरूरत नहीं है चेक करने। नहीं मूर्ति, कोई फायदा नहीं।
नई कार खरीदने से पहले एको चेक करें और 36,000 तक बचाएं।
खुल जा, ओपन ओपन, खुल जा डिमसम, खुल जा दरवाजा, खुल जा।
चाहिए सोना तो इतना हैसल क्यों लेना? माई डिजी गोल्ड ऐप फ्रॉम सेंको गोल्ड एंड डायमंड। सोना खरीदो, बेचो या रिडीम करो, कभी भी कहीं भी इंस्टेंटली। डाउनलोड माई डिजी गोल्ड ऐप नाउ।
Okay, let's begin the day with talking about some stocks. Nimesh is here first up to tell us why he's watching Kotak Mahindra Bank this morning. Nimesh, over to you.
Hi, morning, Sonia. So Kotak Mahindra Bank is in focus because Canada Pension Fund is looking to sell 1.6% stake via block deal today. The book indicates the discount up to 5%. Compared to yesterday's closing price. But I think the execution will be important. If the deal happens in the block window with just 1% discount, you will see some short covering as well because the market was anticipating a large block in Kotak Mahindra Bank. So that's something to track. Having said that, even after this block deal, Canada Pension Fund will continue to own 3%, for which now they have a lockup of another 180 days, which means for the next 6 months, they can't sell further. As far as liquidity is concerned, I was looking at a Novama note, and they say that MSA is unlikely to make any changes with regards to the weight. And FTSE, if you remember, has been increasing the weight on a regular basis. So FTSE reaction could be important to track. But as far as MSCI is concerned, no change as for the November note. But a large block at a discount. So need to see how the deal gets executed.
Okay, all right, Nimish, thanks a lot for that. Well, Vivek joins us to tell us about Tata Power as well as HAL. Morning, Vivek.
Well, good morning. Tata Power is in focus on the back of the fact that the renewable energy arm has gone and received an LOA, a letter of award from Tata Steel. Now, this is to set up a 966 megawatt renewable power project, which entails a mix of both solar as well as wind. Solar will comprise almost 379 megawatts and wind will comprise close to 587 megawatts. Now, this is a large industrial round-the-clock power project under the group captive regime, and the company claims it could be one of the largest ever in the Indian market. The other stock on our radar is Hindustan Aeronautics. Interesting development. The board is going to consider a stock split on June 27th. Now, remember, 2023 has been quite an eventful year. The stock has been an outperform, up almost 40%. Stock entered the MSCI Standard Index, and also the company did do a small offer for sale in order to meet the minimum public shareholding. Stock is outperformed even since the OFS.
All right, Vivek, thanks very much for that. Now, Sonal is joining in. She's got her eyes on Aether Industries and Biocon. Sonal, tell us more. Morning.
Good morning, Prashant. For Aether Industries, they had signed an LOI or letter of intent back in March, and now they say that agreement has been finally signed. It is an agreement with Saudi Aramco Technology for the commercialization of sustainable converged polyols technology. So that LOI has been converted into an agreement. The company says there is a significant revenue potential here with higher volume. So that is something we'll be tracking closely for this one. For Biocon, there is a good news where company's Bengaluru API manufacturing facility has received good manufacturing practice compliance certificate from a competent authority in Germany, and the facility has gone under this inspection in February this year, and this has come through, so that's why that stock will be in focus as well.
Okay, thanks a lot for that. Well, Vivek is here to tell us about more stocks that are in the news this morning. Vivek, what all is on your list?
Well, quite a few stocks on the radar. NHPC is in focus. The slew of announcements regarding the pump storage continues. So the company's arm NHDC has got a 525 megawatt pump storage LOA. This is for a site in Madhya Pradesh. Watch out for capacity infra. The company has gone ahead and raised almost 96 crore via preferential issue. The list of bidders here is quite stark, given the fact that Param Value Investors has picked up almost 50 crores. Mr. Vikas Kemani has subscribed to 25 crore, and Capri Global Holding has also subscribed to 5 crore within the preferential issue. The others comprising the rest. Also keep an eye out for both the IRB Twins, IRB Infra as well as IRB Invit. May revenue toll collections continue their strong uptrend, up 20% for IRB Infra. IRB Invit has seen a 9% uptick. And lastly, Snowman Logistics, yesterday an interesting bulk deal there. The promoter, which is Gateway District Parks, has gone ahead and increased their stake by around 0.8%. They picked up 14 lakh shares at 43 rupees a share yesterday.
Okay, thanks a lot for that. So let's do a quick, recap of all the stocks that we're looking at. Stocks with positive news flow: there's Tata Power, HAL, Aether Industries, Biocon, NHPC, Capacity Infra, IRB Invit, and Snowman Logistics. While the only stock with negative news flow, of course, because of the impending stake sale by CPP, is Kotak Mahindra Bank. But let's also get a handle on what's happening in the world of commodities. Manisha Gupta is joining in for a roundup of all the action there. Manisha, the world of crude has been largely supported. The prices have been supported. But tell us this morning, how are things looking?
Oh, well, yeah, $70 a barrel is still holding. But, overnight we did see the prices decline 4.5% after news that U.S. and Iran reached a temporary nuclear agreement that would allow Iran to resume oil exports of around 1 million barrels per day. However, both the countries denied the report, causing oil prices to recoup most of those Thursday losses. But even then, with that, overnight we saw nearly 3% of decline. Asia has seen some buying coming in. But even with that, the crude prices are headed for a second weekly decline. What is headed for a second weekly gain, though, is the gold and silver prices. Gold gained 1% overnight, and silver is now trading at a 4-week highs. Within the metal space, copper, steel, iron ore, all of these metals are trading in the positive in anticipation of a stimulus coming in from China.
All right, Manisha, thank you very much for that. We'll take a quick commercial break here. Ajay Borke will join in for some fundamental stock talk. Later, we'll connect with the management of TeamLease to talk about hiring trends and how business for TeamLease is panning out. Motilal has upgraded the stock recently to a buy. Stay tuned. Both those conversations coming up.
इंश्योरेंस कोई आरओआई नहीं है। एमएफ ईयर चेक कर, हाई होगा। क्या है?
आप बीपी चेक कीजिए, हाई होगा। हाई बीपी से सीकेडी हो सकता है और उसके ट्रीटमेंट से आपका टोटल लाइफ सेविंग्स खत्म। SHI ले लो।
SHI
स्टार हेल्थ इंश्योरेंस। अपनी सेविंग्स को बचाइए स्टार हेल्थ इंश्योरेंस के साथ। द हेल्थ इंश्योरेंस स्पेशलिस्ट।
दुनिया में कुछ लोग कहते हैं और कुछ लोग करते हैं। जब कहा गया देश में सोलर पावर सफल नहीं हो सकता, तो हमने सुना नहीं, उसे सफल कर दिखाया। कहा देश का सबसे बड़ा पावर प्लांट बनाना इम्पॉसिबल, तो हमने पॉसिबल कर दिया। बोला कोने कोने तक बिजली पहुंचाना किसी के बस की बात नहीं, हमने पहुंचा दी। सवाल उठे एनवायरमेंट फ्रेंडली गैस सब तक कैसे पहुंचेगी? हमने वो भी पहुंचा दी। कहा तो ये भी गया पैकेज फूड बिजनेस हमसे नहीं हो पाएगा, लेकिन हमने कर दिखाया। बातें उठी सीमेंट सेक्टर में हम कभी स्ट्रांग नहीं बन सकते, तो हमने सुना नहीं, बन के दिखाया। चर्चा हुई देश में इतना बड़ा पोर्ट बनाना असंभव, हमने संभव कर दिखाया। और जब कहा गया देश के एयरपोर्ट्स इंटरनेशनल स्टैंडर्ड्स के नहीं हो सकते, तब भी हमने सुना नहीं, कर दिए। मुश्किलों की नहीं सुनते, हम करके दिखाते हैं। अदानी, हम करके दिखाते हैं।
Welcome back. Hope you're having a good morning. Well, the SGX Nifty suggesting for starters that we like to see some green. Remember, yesterday we ended virtually at the low point of the day, so good to see that on a Friday morning, at least some green is what the bulls will be looking forward to. But let's discuss a lot of stocks. To help us out with that, we're joined by Ajay Bodke, independent market analyst who joins us on the show. Hi, Ajay. Good morning. Ajay, let's talk about the top stock that's going to be in focus today. Kotak Mahindra Bank. There was a bit of a whisper that maybe we see that large trade take place where a big seller is looking to sell some part of it. What's your view on the stock? It was down 2.5%, and today, if it's done at a discount, it's likely to be a little bit under pressure yet again.
Good morning, Nigel, and thank you for having me. One had seen a lot of interest in Kotak due to the increased inflows in the MSCI a few weeks back. Let's not forget that the current seller has a total. He's planning to sort of sell. Roughly 1.7%, but the total holding that he has is substantially more than what is up for sale right now. So I'm constructive on the stock, but my preference still remains in the banking space with HDFC Twins. The underperformance that one saw over the last few years of HDFC Bank vis-a-vis ICICI Bank and Axis Bank, I think it's time for that underperformance to end. And as the merger process gets underway, I think one will start seeing HDFC, the combined HDFC, I think gaining the pole position in the universe of banks. So my preference remains with HDFC Bank, and on the PSU side with SBI. I also feel that IDFC Bank, although it's done quite well over the last few quarters, I think still has some more legs and some more room to run. And one should look at HDFC Bank and City Union Bank on declines.
Okay, I wanted your thoughts on D-Mart, because there's a very interesting note that Motilal Oswal has put out this morning where they've upgraded the stock to a buy, and they've also raised the target price to 4,200, which is a big upside to the current market price. But their main view is that they're saying that D-Mart has just about scratched the surface in terms of growth, and there's a long runway of growth as the modern retail space has picked up in a big way. And I agree, because, the one step into any mall, any shopping, plaza, and it's completely packed these days. So I'm sure there's a long runway for growth. But your thoughts on D-Mart?
Sonia, I think what D-Mart has been witnessing over the last few quarters is a growth rate moderation due to mainly, I think, lower demand in the superior margin general merchandise. And that's what has been impacting the margins of DMart. So for the stock, which anyway has always been very richly priced, for it to come back and start outperforming its peers as well as the market, I think they need to ensure that the general merchandise sales, I think, start picking up. So I will be keeping a very close watch over a quarter or two in terms of how the margin profile improves due to the general merchandise sales. And that will be the trigger for me to look at the stock, because let's not forget it's very richly valued.
Okay, all right. Ajay, just a quick word on, by the way, we'll talk more about this one a little later. IEX, there was a sharp sell-off in the last 60 minutes of trade yesterday. But any thoughts? Have you looked at the news flow?
No, I have not looked at the news flow. I think yesterday I did see a very sharp cut happening, I think especially after 2:30. I think there was a very sharp cut, but I haven't really been able to look at the fundamentals.
Okay, all right. Let's do one thing. If you have any thoughts on Team Lease, we would love to hear that, but we'll give you some time to ponder over it because we have the management on board as well. Team Lease is on our radar. Motilal Oswal recently had a bullish view. The stock, they've upgraded the stock to a buy. They say that there is scope for re-rating as near-term challenges have eased. Ramani Dati, who is the CFO at Team Lease, joins us now to discuss their business momentum and the outlook going forward. Ramani, thanks a lot for joining us on the show. Appreciate your thoughts here and good to see you in this morning. Motilal Oswal in their report talks about how the margins at 1.6% are now the bottom that the company has seen, and there is a good improvement from here on given the kind of pickup we've seen in hiring as well as the cost optimization methods that you guys are undertaking. Just take us through what the margin trajectory could look like and what are the levers that you have in place?
Sure, Sonia. So in FY23, our main margin contributing businesses, which are our IT staffing business and degree apprenticeship business, both have had very strong headwinds. IT, we have seen globally, the entire hiring was on freeze and we lost some headcount as well in that segment. Same with degree apprenticeship, with the regulatory changes and uncertainty around the NEEM program, there also we lost some headcount. So that's the bottommost margin levels that we can hit to 1.6%, what we had last year. And with the initiatives that we have taken on cost optimization and with staffing business growing quarter on quarter very well, we are confident of improving margins consistently from here on, Q2 onwards. Especially in, if I take general staffing business, last quarter we did about 8,000 and we have a very strong outlook for FY24 as well. We are confident of doing close to 8 to 10,000 net addition quarter on quarter in general staffing business. And the growth is across segments and across industries. And that will be the main margin expansion contributor for us. In case if IT staffing get picked up, that can be a wind on our back. We can accelerate our margin expansion further.
So when you say improve your margins further, are you looking to get back to the 2% plus mark anytime soon in FY24 itself? Could it be much higher than that? If you can give us a ballpark range.
In FY24, I don't think it is possible until and unless there is a huge turnaround in IT staffing business, because in general staffing business, our gross margins are 3%, whereas in IT staffing, gross margins are almost 16%. So we need the IT staffing segment to pick up to get to a 2% overall net margin. So in FY24, I can't put down any number. We don't give guidance, but definitely there'll be a margin improvement from FY23.
Right. How is the first quarter, 2 months of the first quarter are behind us? How has the quarter been? And I think you had mentioned that post Q2, things will improve substantially. So could you provide us with some numbers? Q1 first, how's Q1 so far been? Is it better?
Yes.
Already showing signs of improvement? And, what will happen after the second quarter?
Our main business segment, general staffing, is growing very well and better than last year. So first 2 months into the quarter, we had very good headcount addition, and we believe the same momentum can be continued. Because right now, except for the IT tech hiring, so we are seeing good amount of hiring happening across all other industries. So for us, the three main contributing segments in general staffing are banking and financial service, consumer verticals, and telecom. And we believe these three segments will continue to give us more numbers in the coming quarters as well. IT, as of now, the numbers are kind of stagnant, and first 2 quarters, we are not expecting any kind of revival based on the discussions that we are having with our clients. But we are hoping that from Q3 onwards, we can see some green shoots in IT staffing as well.
All right. Hi, good morning. The last time around when you joined us, you were telling us you're renegotiating some contracts to boost productivity per employee. Can you elaborate on that? I think, you were trying to give us some outlook with regard to that as well. So what are the contract renegotiations that you're looking at?
So we have been stuck at an average realization of 700 rupees per associate per month for a long time, Nigel. And this is something which has impacted our overall margins as well in the last year. So we have started renegotiating the contracts wherein we can pass on the inflation impact in our associate salaries back to the customers. But to be very honest, we are finding it extremely difficult. So what we are doing in the back end is we have taken digital initiatives to improve our core employee productivity, and because that can directly contribute to our margin expansion. So even though we are planning to add almost 8,000 to 10,000 new associates quarter on quarter, in the back end, we are not increasing any costs or any core employees to handle this scale and volume. So that should directly contribute to our margins. Again, I cannot put down a specific number because our margins are derived by the top line, which is a flow through of associate salaries. But definitely there'll be a margin improvement both in absolute as well as percentage terms.
Okay, a margin improvement in absolute as well as percentage terms. But can you tell us in terms of renegotiation of contracts, can you just quantify it for us? I think I missed that. How much will that help you boost your productivity per employee? And if you can just share some numbers with us on what the way forward could look like.
Yeah, Sonia, actually, I mean, both are two different elements. Renegotiation of contracts is to increase our average realization, our gross margin. Productivity is the one which is below the gross margin, where our core employee costs we are trying to optimize. So, for example, in case of IT staffing, post-COVID, there is almost a 20% inflation in salary costs of the associates. So we have gone back to the customers and increased the rate cards, renegotiated on some of the margins, and made sure that the gross margins have remained at that 16 to 18% range in IT staffing. In general staffing business, unfortunately, we are kind of stuck at that 700 rupee PAPM, while we have been continuously working on how to improve that, be it by way of renegotiation or by offering value-added services to the customer. We are finding it little challenging. I think even in FY24, for at least 1 or 2 quarters, we may continue at the same level of gross margin. But at net margin level, with the help of productivity enhancement, we'll expand margins.
We'll leave it there, Ramani. Thanks very much for your time. Good speaking with you. Good luck, and hope to, as you say, maybe a little down in the year, IT staffing perhaps will also start to improve. Thanks very much for joining us. And that's been a trend we've seen with companies like InfoEdge, etc., as well, Naukri, where the IT business is under pressure, but some of the other segments are all firing and firing hard. That shows up in the markets as well, really. Yeah. Right? We just had Ajay talking about how, not Ajay, but Rana Gupta talking to us about how IT is the one which is the culprit. Otherwise, the index itself should have also done well. So that's a little bit in the hiring trends that we have.
And there's also a clear slowdown in technology staffing, right? Yeah. Specialized technology staffing. So that is something that's evident and perhaps having a repercussion on the IT sector.
Some excesses last couple of years getting pulled back, right? We'll take a quick break here. Ajay is with us, and so will Shrikant Chauhan join in for some technical trading ideas, and we'll have Kush Bora join in as well. Stay tuned. That conversation follows.
What does your investment portfolio look like without gold? Incomplete. Because as a gold owner, you have the power to make bold decisions. To balance risks and returns. The power to buy and sell. Right at your fingertips. Making gold your strategic advantage.
Without which, your portfolio is incomplete.
Power your portfolio with gold. World Gold Council.
If you really are an environment lover, you've got to cut the crap, brother.
The all-electric and environment-friendly MG Comet EV, the no-nonsense car.
Keeping up with the pace of life is not easy. To find the perfect balance, we need to savor the pause. See? It never ends.
Forget my statistics. Wins, losses. My man of the matches. My greatest evers.
Show me hope, show me faith. Take
Forget my interviews, my sound bites.
fire, show me grace. Now you're
My every rise, every fall. What I am has no bearing on what I'm about to be. My account starts today.
Tejas VC, the springboard of your story that's about to be written. Start your account today.
Welcome back. We just got 15 minutes to go for the pre-open session to kick off. Ajay Botke is still with us. Ajay, so we had the RBI policy yesterday, but my question is not about the policy itself, but there were some proposals really, about the first loss guarantee for digital entities, digital lenders like Paytm, etc. Have you managed to take a look at what this would mean, what the RBI is proposing?
I haven't had a detailed look at it, Prashant.
Okay, got that. What are you focused on, Ajay, right now in terms of what you think will do very well from here? Because it's been rotation, right? Even in large caps, we are seeing FMCG as a pack doing very well. Autos, actually, only those two have done very well. Power, perhaps, is a new sector. Yesterday, we saw NTPC rallying quite hard. What's your sense?
Yeah. Prashant, I think I've done some analysis about how various sectors are today faring in terms of the valuations. And if you look at FMCG, it is trading at nearly 110% premium related to the Nifty PE, which is the last 10 years average. If you look at it, it's average plus one standard deviation above. Similarly, capital goods is one sector I would advise investors to be cautious about, because that's again trading at average plus one standard deviation over last 10 years average. It's a 60% premium to the Nifty PE. And lastly, auto sector, that's also trading at nearly average plus one standard deviation above the last 10 years mean. All these three sectors, mind you, I think not so much consumption, but at least capital goods and autos, today investors are highly overweight. And just to give you one example about some of the exuberance in the capital goods sector, I was looking at Siemens and ABB and comparing the valuations vis-a-vis their own parent. And if you look at the revenue growth for, say, Siemens Limited, that's the Indian company, from 18 to 22, it's at around 6.5% CAGR. The parent's growth has been 6.7% in the same period, slightly higher. And Siemens today is trading at 7.3 times EV to sales. And the parent is trading at 2.1 times EV to sales. So there's a 372% premium at which the Indian entity is trading vis-a-vis the parent. And mind you, the operating margins for the parent are better than the Indian entity. The same holds true for ABB too, where ABB India's growth has been 6.2% CAGR between 18 and 22. Whereas the limited, which is the parent's growth, has been slightly lower at 3%, 3.2%. But the premium, again, the parent is trading at 2.5 times EV to sales, and the Indian entity is trading at 9.3 times EV to sales. Again, the operating margins being better for the parent than the Indian entity. Now, you could argue that there are strong tailwinds, like strong order book inflows and backlog that the Indian entities have. But whether the parent, the fact that parents have better operating margins, and whether the strong order book growth itself is justifies enough for the Indian entities to trade at such a premium is something that I am not comfortable with. I think if you just go back in case of IT sector, when it was the exuberance was very strong, people thought that, the premiums would continue. Something similar I'm sensing in case of capital goods companies. And that's why I would advise investors to be cautious there. To answer your question, to conclude, I think IT and pharma are two sectors where if I look at the valuations today and the under ownership, I think one can be selective in terms of looking at some picks out there.
Ajay, it's a pleasure. IT and pharma is the spot that you want viewers to keep an attention on. Otherwise, valuations elsewhere a little higher. Now, IEX is the stock that we want to focus on, the company we want to focus on. It's fell 8%, 8.5%, almost all of it in the last 30, 40 minutes of trade. And there is news here as well. There's a circular dated the 2nd of June 2nd, where the Power Ministry is asking the CERC, the Central Electricity Regulatory Commission, to undertake the process of consultation and implementation of market coupling in a timely manner. Now, Mr. S.N. Goyal is Chairman and Managing Director at IEX. He's joining us right now to take some questions. Mr. Goyal, good morning. Great to have you with us here, sir. First of all, could you, in very simple terms, tell us what does market coupling mean? We have analysts who track the company, who track the sector, saying that this will take away pricing out of the hands of IEX. IEX, if this goes through, will only match volumes and will not there will be no discovery of prices which will happen elsewhere. Is that interpretation correct? Go on, sir.
Good morning. As far as market coupling is concerned, what we understand from the market coupling is when you have different geographies and the markets are operating in these geographies, you couple these geographies to take advantage of diversity in demand and supply in these geographies. Europe has done these things. 26 countries of the Europe they did the market coupling to integrate these countries to take advantage of the different sources of power and demand variations. In India, we have one market in the country. Already, the entire country is coupled through the market. So there is one market. I don't understand this market coupling, what we are now talking about, that different exchanges will be coupled through this. This will be something like, couple maybe BSE and NSE or couple Ola and Uber. So that don't make a real business case. I mean, it will kill basically innovation and competition in the sector. So I don't think the interpretation of the market coupling, which is now floating from the last one day, is the right interpretation. And in any case, CRC ministry has requested CRC to look into this. CRC will definitely analyze whether in the present market design, which is a voluntary market, in this voluntary market design, whether market coupling has a place, whether we should go for it or not, what are the advantages, what is the advantage.
Mr. Goyal, have you asked Mr. Goyal, you're saying the interpretation is maybe not correct, but have you reached out to the ministry to understand what this would mean? And prima facie, prima facie, you're saying that pricing will remain, price discovery will still happen on the exchange. That's your understanding. You're sure?
See, the price discovery has to happen only at the exchange only. The main role of the exchange, as per the power market regulation issued by CRC, is that exchanges have to do the price discovery. And they have also defined how the price discovery is to be done. So I have no doubt about that. And in any case, it is the regulatory function to regulate the market. And I'm sure the regulator will look into these things. They will, if required, they will initiate the stakeholder consultation. And thereafter, maybe if they want to implement this, then they will have to construct the design of the market, amend the regulations. So it's a long drawn process.
Right. Hi, good morning, Mr. Goyal. Nigel on this side. From the market perspective, they believe that the moat of IEX will get disrupted, and that's why the stock was under pressure. But we take your point on board. Could you tell us with regard to implementation? Now the CERC has to have a look at it, right? What kind of a time frame can we look at?
See, first of all, CRC will have to internally decide whether they would like to go ahead with this or not. Whether in the present market design, which they have implemented, CRC has implemented the present market design voluntary market from the last 15 years. And they have licensed the 3 exchanges. And all these 3 exchanges are operating in this space. It is only 6 to 7% of the country's generation, which is not transacting through the exchange. All buyers and sellers have different options available in the market. So in this kind of a voluntary market, whether market coupling is really required or not. I mean, if you recall, there was a discussion on the MBID earlier. So if you implement MBID, whereas the entire generation of the country has to go through the market, in such kind of a scenario, yes, maybe market coupling has a point, but not in the voluntary market. So CRC will
Mr. Goel, that's the other negative, right? Because there's no mention of embed, which, you and me as well have discussed many times in the last 18, 24 months. That was supposed to be the big trigger, but there's no mention of that. There's mention of coupling, but there's no mention of embed.
That is why I'm saying that CRC will look into this, that whether under the present market framework this is required or not. And if they feel that we should go ahead with this, then they will issue a consultation paper. Everybody will have opportunity to give their submissions, comments. We will also have opportunity to give our comments.
Mr. Goel, Mr. Goel, morning. This is Sonia here. Morning. So, assuming that the CRC goes ahead with this, because, that's the fear that the street has. The stock was down almost 10% yesterday. So, assuming that the CRC goes ahead with this, what would the impact be on IEX? What kind of volume hit are we looking at? And any other impact that you would have?
So, if it is implemented, then we will have to see what kind of a construct they are going ahead with. Is it one of the exchanges going to do the price discovery, or they are going to have some third party doing the price discovery, and exchanges are only collecting the bids and doing the financial settlement? So we'll have to see the construct, what they are going to do. And thereafter only we will be able to assess the impact.
Okay, so you're saying as of now you need to see the construct if and when it goes through and then assess the impact. Got that. Can you tell us, have you given up or ceded any market share to the other players in the recent past organically? And if you can just help us with the numbers. What is the market share currently and how much has it changed?
Earlier our market share used to be almost about 94-95%. Okay. But in the last 1 year, it is now almost about 88-89%. Because last year, one more exchange that came into operation. And with that, the market share is slightly down now.
So, Mr. Goel, just on this market share perspective, I think you had mentioned last time around from 95, it came to around 89%, but you're expecting it to go to early 90s. So you hold on to that view for this year. We'll have to wait for the implementation of these new proposals. But for this year, you see it at around 90 to 93%, point number one. And volume growth, I think you were guiding for, is around 15% for this year. The first 2.5 months, have they shaped up okay? And do you hold on to that volume guidance?
Yeah, as far as the market share is concerned, CRC has already issued the GNA regulations and transmission charge sharing regulation. So the anomaly which was there in the transmission charge sharing regulation will get implemented now. And that should lead to shifting of volume on the day-ahead market. And as far as the growth is concerned, I still hold the view of 15% growth because in the first 2 months we have achieved almost about 8% kind of growth. And now monsoon is coming. We will have large hydro generation in the country, wind generation in the country. So there is going to be improvement in the supply side.
Mr. Goel, if I just to go back to this regulation, right? You said it will be up to the CERC, etc. But if I look at the circular, the 2nd of June circular, and see how it is worded, right? It's almost as if the ministry has made up its mind. It says Ministry of Power has decided to go ahead with the process. CERC is requested to take suitable action so that the process of consultation and finalization of the construct for its implementation is done expeditiously and the same can be implemented quickly. So, yes, there will be a process in terms of how this will go through. So, they'll have to go through the, different stages, consultation, etc. But from the ministry side, there seems to be a push. If you just a basic reading of the circular, sir, from the ministry.
Yeah, I have read this. I read this letter, and ministry has given their peace of mind, but they have requested CRC to initiate the stakeholder consultation and start the process. And CRC, whenever they do any change in the market design, they initiate the stakeholder consultation. Yeah. That's the process. That's the process which is defined in the Act also and in the CRC regulations also.
All right, we'll leave it there, sir. Thank you very much for joining us, Mr. Goel, and running us through what you make of this right now. This is very initial stages, and it'll take some time before this will finally go through. I mean, but in markets, always, they shoot first, ask questions later. Yesterday, the stock was down 8.5%. I'm not sure whether, we'll see any meaningful recovery or anything till there is more clarity, till we, I guess, hear from the government itself in terms of what the intention is. We'll try and do that as well. We'll take a quick break here. The pre-open will be with us, and we'll also have the management of Mastec to talk to us about how business is shaping up for them. Stay tuned.